Hello everybody, welcome back to the channel. It's Monday, July 6th, so let's talk capital. Alright guys, first and foremost, I hope you guys all had a great 4th of July weekend. I know I did. We went camping and it was a good opportunity to recharge batteries, have a little reset before we come back to the craziness. And that's exactly what we did. But we did miss some important nuggets of information on Wednesday and Thursday and Friday by not being here. Nothing too major, but we're going to go over that right now before we jump into the chart. So basically what happened on Thursday was unemployment rate and unemployment claims came out. So we had a higher than expected unemployment claims number, but we did get a lower than expected unemployment rate. Okay, so what that means is we're basically adding more jobs into the market than we are subtracting, which is a very positive sign, and the markets have been reacting positively to that as expected, right? So basically, what happened is we had about 1.4 million unemployment claims, but we were expecting a 12.5% unemployment rate, and we got about 11%, so which is good. If we can manage to get that unemployment rate number under 10%, somewhere like 9.5, probably 9.5 to about 9 over the next 2 weeks or 3 weeks, maybe a month, then we're going to be very nicely primed for the S&P 500 to set a new all-time high this year. And that's exactly what we're going to talk about right now. So first and foremost, obviously, let's go over the S&P 500, the weekly close. Weekly close was very nice, honestly, way nicer than expected. I was expecting a pull down to our support level here, but we did get a nice bullish engulf of the previous 2 weeks, and we pushed back up to our level of resistance now since we're under, right? We pushed back up to our diagonal level of resistance here. More importantly, we're pushing back into this channel. So if we go daily, we're going to see that. So we broke out of the channel and used the 50-day and the 100-day as support, okay? And we are now currently pushing back into the channel, and today's daily close, which is this candle here, is very nice, okay guys? Not only did it push and close into the channel, we also pushed above the horizontal level of resistance, and we barely, but we did close above the diagonal level of support. So now resistance, sorry, the diagonal level of resistance, which is now should be support. Now what we want to see happen is for this candle not to go any lower than 31.25. Okay, we want to see 31.25 really hold the support so S&P 500 can continue pushing upwards and slowly make progress back up to the end of the channel here, which would put us about 34.50, which is my end of the year target for S&P 500. We would be perfectly primed for that, right? So end of the year target for me is about 34.50, 3500, and as of right now, we're looking primed for that. Gold looking good, honestly. Weekly close, let's go ahead and look at that. Weekly close, we got a weekly indecision candle in a spinning top right there. It's to be expected at a major resistance point, right? Not only horizontal resistance at 1781, but also diagonal resistance connecting these tops, which put us at about, where do we cap out here? 1790. Okay, so all of it is to be expected. So if we move back down to the lower time frames, most people would be saying, well, why aren't you longing here? We are above the level of resistance, should act like support now. Simple reason is this, guys, why I'm not longing here, and gold has been a very beautiful play for the past 2 or 3 months that we've been talking about it in these videos, if I remember correctly. I mean, I've been making a killing on this guy, but it's all about timing, guys. Trading is all about timing. It's not some rocket science we do. It's just timing. Okay, so basically this is what I'm seeing, and this is why I'm not in a position on gold right now. Okay, again, we have a high, and another high here, all of them rising and hitting a level of resistance, right? Now that we have this high set, A, I don't like that daily close. B, we're looking at a very weird but still playable head and shoulders pattern forming right there, with your neckline being that. Okay, this is why I'm not playing this. Now, where I will be interested in gold is simply put right here. So we have this middle line of the channel here, and if we extend this out, if gold wants to pull back down to this level and let us in, I will be entering there. Also, if we get an ultimate entry somewhere around here, about 1750, 1730, then I'm definitely gonna long. Okay, now those are on the pull down. So if we were to get a price reset, that's where you would enter, right? Now let me tell you guys where you would enter if you see a price break. Okay, so basically if you see price break, okay, if we see price break this resistance in the golden line right here, if we see price break and come up and do something like this, I'm 100% in right here. Okay, this is what I'm more than likely expecting gold to do. I'm expecting to break out and give a retest, which is where we enter for long all the way up to 1832 and above. Honestly, this thing, once it goes, it's gonna go. Okay, but if we don't get that and we get the pull downs, well, I just told you guys, we're either gonna enter here or we're gonna enter here, depending on candle closes. We don't just get there because candles touch the line. That's not how this works. We have to wait for candle close to confirm the move for us to get in. So I'm either going to get in on the break and retest of this, or I'm going to get in on a pull down somewhere around here. As of right now, we're not in any of those areas, so we're just watching gold. Bitcoin daily getting a nice pop off of our support line here, guys. Remember, I'm going to go ahead and say this. I don't expect this trend line to break. We've been in above it. We've been using it as support, and we're just continuously bouncing off of it. And it seems like Bitcoin has found an equilibrium, a fair value price at about 9,000 and 9,400, 9,500. So I don't expect us to go under 9K and stay there. Okay. So as of now, we're getting we got a bounce today. We got a nice bounce coming in from yesterday. Actually, we saw it come all the way down to 89.14. And immediately reject that and popped up and has been moving upwards for about the last 24 hours, 25 hours. I'm sorry, 24, 30 hours or something like that. We're steadily moving up, finding resistance right now at the 50-day moving average, about 93.80. So that's obviously we should have expected that, right? That's where we're expecting resistance, at the 50-day moving average. Now, if I bring you guys lower here, basically, we're on the top side. Look at the bottom side. We're basically looking at a close below this trend line. As you guys can tell, this is the same trend line. Now we're on a 4-hour chart. Okay, so this is the same trend line we've rejected and held, right? If we get a candle close, not a wick, if we get a body candle close below this trend line, that means we're heading lower. Now, on the top side, this is basically what I'm watching here. If we can get a close, a break above this short-term trend line, then we're immediately heading for the long-term trend line, and a break of this right now sits at about 9,700. So if Bitcoin closes 98 or higher in the next day or two, or sometime in the next week, that's basically the most bullish thing Bitcoin can possibly do and has done in the past 3 years, right? A close above 9,700 is the most bullish thing Bitcoin has done in the past 3 years. Do not get that twisted in your head. 9,700 close with a body, not a wick. Okay, if we can get that close, that is the single most bullish thing Bitcoin has done. That primes us for 20K, and that move will be quick and violent, aggressive, very quick and aggressive move to 20K. Okay, before we continue, I have two really cool things to show you guys. But before we continue, please leave a like. Please hit that subscribe button if you haven't yet. It definitely helps the channel. It lets me know that you guys enjoy the content. And if you're not enjoying the content, hit that dislike button. Let me know why you don't like it. Leave a comment. Let me know what you guys think of the content we're putting out. Okay, guys? So real quick, I mean, not real quick, but that was real quick saying that. Now we're going to move forward. I want to show you guys something first. Okay, so in this video on April 16, 2020, about 2 months ago, 2 or 3 months ago, right? We made a video talking about if S&P 500 is ready for new all-time highs this year. Okay, and we also talked about Amazon and Netflix, and I gave you guys a price targets for both of them on the breakout, talking about if we get higher than these prices, this is where the next target for the move is. Now, for Netflix, we gave a target of $520, and for Amazon, we gave a price target of $3,050. Okay, both of those were hit today. Okay, this is why I do what I do. I want to show you guys that it's not impossible to trade these charts. It's very possible, as long as you keep a level head and you keep it simple. Remember KISS, the acronym KISS. Keep it simple, stupid. Okay, this is not rocket science. I don't know how many times I'm going to say that, but it's just not rocket science. It's very simple, okay? Go ahead and go watch that video, April 16th, 2020, titles S&P 500 new highs this year. I'm not gonna play it for you guys. I just want you guys to know the predictions were made in that video. Okay, so now going back to these charts, you guys can see how this is Netflix. We can see how that break of that trend line we were talking about led us to this move to right at 500 bucks. So we're $20 shy of the target we mentioned, but we're right there, and we should get to that target sometime this week. So 520 should be hit this week on Netflix. Okay, now had you got in at the break, we're talking about 360 bucks. So we're talking about $140 a share in profit you would have made. Now percentage wise, that's 38%, guys. You're beating out hedge funds, you're beating out trusts, you're beating out family offices, you're beating out everyone doing this kind of stuff. 38% on one trade is beautiful. It's absolutely beautiful. What's more beautiful is Amazon. Look at Amazon, guys. I told you, we talked about how if we get above the gap and we get above this with a solid close, we're primed for 3K, right? Well, that happened right here. We closed above the gap, and we closed above this. And same candle basically took us above resistance on the gap and the all-time highs, right? And from there on out, we've just been climbing, right? So let's play it safe. Let's say you got in here after the gap was closed, right? We're talking about 35%. Okay, these were calls that were made on April 16th, almost 3 months ago, 2 or 3 months ago, right? All you had to do is stay in these trades for 2 months, and you would have been up a combined about 80%, 75%. You know, so this is why we do what we do. Okay, I want to show you guys these so we can keep an eye on future price calls that we make, so we can see how they develop, right? I have a great video coming out for you guys tomorrow. We're going to talk about the winners and losers of the first 6 months of this year. And I have some shocking winners for you guys. You're not going to believe your eyes when you see this. So make sure you watch tomorrow's video. It's going to be definitely an interesting video. But as always, thank you for watching. Thank you for supporting the channel. And I'll see you guys in tomorrow's video. Have a great day.